Equity, in simple terms, is the value of a property after you have paid all charges associated with it. By holding equity in a company, we are essentially purchasing a piece of that company. Finding this value of equity is what drives the stock markets. An example would be the best way to deal with this concept. Suppose that you and three other friends have an idea to start a newspaper. It is a unique concept that you have come up with. It is slightly different from all the other newspapers available in the market. Say you and these three friends, that is 4 people in all, put in an amount of 50,000 Indian rupees each, the total amount coming up to 2 lakhs. So now, your complete assets includes 2 lakh rupees of capital investment, human skills that you and your friends have, and of course, the idea of the newspaper. To start off, you equally divide the company into 4 parts, so each person owns 25% of the business. Now the net equity of a company, including media companies, is the difference between assets and liabilities. As discussed, your cash, idea, and human skills are assets. However, in economic terms, your asset is 2 lakh rupees. Now, to produce a newspaper, there are a variety of fixed costs. A basic example would be the rent for an office building, payroll, interest to a bank loan, if any, etc. Suppose, in an arbitrary example, all of these liabilities come up to 1,50,000 rupees. Your company equity is essentially 50,000 rupees. If liabilities exceed assets, negative equity exists. Shareholders' equity represents the remaining interest in assets of a company spread amongst individual shareholders of common or preferred stock. Equity is helpful in understanding liquidation process in case of bankruptcy. At first, all secured creditors are paid. Ownership equity is paid last. This is why ownership equity is also called risk capital or liability capital. Some marketing researchers have concluded that brands are one of the most valuable assets a company has, as brand equity is one of the factors which can increase the financial value of the company, although this is not the only one.